Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Aussie dollar US dollar FX for Wednesday, June 19th, 2013. Well, a continuation of the trends of the downside today, a candle that's made a lower high and a lower low. The candle that we're analysing is this second last candle on the chart. This final candle is currently developing and some significant events going on there that I might have a look at in a minute. But analysing this final candle, very, very large black body candle. We've now seen the sellers come back into this market very, very strongly. Previous to that, roughly about a week or so ago, we saw the market showing some signs of recovery here with a very, very bullish candle, very large white body candle that took out the Tenkan-sen that acted as previous resistance to this market, but the market found resistance at the 96.62 level, which was a previous important area of support and resistance, and now we've seen the market sell off in a significant way from that area. Today we saw the market testing around the 95.36 level, tested just above there, and that area has held as resistance, where if you look here in the recent past it held as support now, and now acting for the two previous days as resistance. And if this market is going to rally again, it will be potentially strong resistance for this market. Now, there was some hope that the market would find support at the 93.86 level, and we saw strong upside price rejection that led to this rally from that region with this small hammer type pattern, and we saw confirmation of that reversal in the market rallying to find resistance at 96.62. But now we've seen the market take that out in a very solid bearish way, closing down below there, and it does suggest that this market may have potential to trade to lower levels. There isn't a lot of support down below where the market's trading and the 90-cent level. It's very important to watch how the market reacts to the 92.21 level. And today, as this candle is developing, we've seen the market test almost down to there and be rejected from there, so that could be significant. If we see a candle similar to what we're seeing develop at the moment, with a small body and this price rejection evidenced by the shadow on the bottom, then there could be potential for the market to rally from this region. But if we see some very solid bearish activity down below 92.21, we could see this market trading quite quickly and testing to lower levels. Now, there aren't any major support levels between 92.21 and the round number 90 cents. So it is quite important for this market, if it is going to rally and halt the downside momentum that the sellers have, it is important that the market doesn't trade in a bearish manner down through that 92.21 level. Now, by the same token, if we do see the market become indecisive around this area and rally, then the 93.86 level now has potential to act as resistance, so that is quite important as well. Now, in terms of the Fibonacci extension, we're examining the relationship of the first time frame downtrend to the previous time the market's trending down, and here today, in a very, very decisive bearish manner, we've taken out the important 50% and the 61.8% level and closed just at or just below the 78.6% level. This does suggest that there is potential for the market to test to the 100% level, which is at 91.98. roughly 92, so we could see some significant support coming in around that area. Now, in terms of the Fibonacci retracement, we are now in an expansive mode of that, and today the market took out the important 100% level in a solid bearish manner, and our next level that we should be looking at is the 161.8% level at 91.15, so no solid support based on this until the market trades down to around that 91 level. In terms of Ichimoku, obviously a bearish market in all three timeframes. The market is trading down below the cloud, so bearish in the long-term timeframe, bearish in the medium and fast-term timeframes by trading below the Kijun-sen, the pink line, and the Tenkan-sen, the green line. And if we look at this market, what happened here, we're trading down below the cloud, and this is typical when we have solid downside momentum, and the market's trading away, making lower peaks and troughs, rallying then and finding resistance around the Tenkan-sen. The Tenkan-sen combined with this 96.62 important level has held as very, very solid resistance to this market, and then we've seen the sellers come back in. So I suggest that with this solid downside momentum, if the market does rally, and if it can rally through 93.86, the area around the Tenkan-sen first, around the 94.50 level will be strong potential resistance, and then around the 95.81, which is a previous important level, we have the Kijun-sen trading there, and that has potential to be strong resistance as well. Looking across here at the Chikou span, that's below the corresponding price action, so it's confirming the negativity that we're seeing in this market overall and suggesting that this market is destined for lower levels. Obviously, as I've already mentioned, moving forward, 92.21 is crucial to this market. At the moment, we are seeing rejection from that level, but if we do see solid bearish activity down below there, we could quickly see the market testing down to lower levels.